Hello, my name is Matt, and finally, we get to the first speedrun with my new dashboard that is not a request, so we can finally see the new random weighted selection in action. Should be terribly exciting. Alright, anyway, so, as always, if you are unfamiliar with what a stock speedrun is, you can check this video's description for an explanation and a disclaimer as to its content. Let's see what we got. Credit Suisse. What the hell is this? Sign into CS. What the hell CS? Get this shit out of here. Okay, so Credit Suisse. Very Good Friday. I'm actually not too... You know what? I always hear about Credit Suisse, and I don't know what it is. Actually, it's funny. I often thought that it was a type of credit, but I guess not. No, it's the name of a company. What do they do? Together with subsidiaries, provides various financial services in Switzerland, Europe, Middle East, Africa, Americans. Company offers wealth management solutions, including investment advice, discretionary asset management services, risk management solutions. So they're an investment bank. That's kind of what I expected. I can't really imagine what else it is. Wealth planning, succession planning, trust services. It's an investment bank. Interesting. People don't seem to like it all that much. Lot of sells and or holds here. I kind of wonder if this number has anything to do with it. They seem to have gotten into negative earnings in 2021, and their last couple quarters don't look too great either. Where's the last earnings report here? Okay, well, I see a few things here. Has days left to answer a multi-billion-dollar question. I want to see what they're talking about there. Will finance a reshaping that will win back investors' confidence, and what the figure is the biggest of my unknowns hanging over the bank in the final days before its plan is unveiled. Looking for a buyer for all or part of its lucrative but capital-intensive scrutinized products group. So it's trying to offload parts of it. And it's trying to sell an almost 200-year-old luxury. Why does it own a hotel? That seems incredibly random. The Swiss return to investors already tapped 12 million Citigroup. First series of rounds. So it's trying to offload. I guess that's why it has... I suppose it seems to think that that's the reason why it has not great quarters recently, is that it's too diversified, I guess is the way to put it. They also have a criminal tax case in France. That can never be good. They revamp, scores win in rigging trial. Finds Cortesies did not rig Forex market. That's good. It's always good when you find that you did not do something. Or an economic collapse. No one cares. Well, people probably do care, but not me right now. Let's see what else we got here. Blah, 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 blah. Currency rigging claims. I'm guessing that's this one where they were accused of rigging the Forex market. I'm guessing this is all the same. This is all the same case. Third party. Okay, these articles are going very slowly. I've scrolled a lot, and I'm already only at 5 days back. So you know what? I want to look for, what was the last quarter? Last quarter was quarter 2. So I want to Control F, and I want to find Q4. No, not Q4. What am I doing? Q2. Not found. Okay, wonderful. Just keep scrolling, just keep scrolling, just keep scrolling. Okay, what about now? No? Alright, this might have to wait until phase 2, because these articles, I've scrolled a crap ton, and my computer sounds like it's going to take off based on how much shit is loaded into the screen, but I still can't seem to find those quarter 2 earnings, so that might have to wait. You know what I want to see with this? Well, let me take a look at the chart, the bigger chart. Little bit of a bounce back recently. That's very interesting. Something else I'm noticing here. Well, a few things. One, they pay a dividend. That's always nice. Market cap is 12 billion. Yet the share price is 4.72. That tells me that there's a fuck ton of shares. I mean, that doesn't really mean anything. It's just interesting. I kind of wonder where all those shares came from. Maybe they had a tough part in their past where they had to issue a bunch of shares for some reason, and maybe they hit that multiple times. I don't know. But that's kind of the only way that I can imagine that just an obscene number of shares come about. And you can see that obscene number of shares with the average daily volume into the 16 million number. It's rare. You don't usually see that. Let's take a look. Let's take a look at conversations. I want to see what conversations has to say. Analyst suggested a strong buy. Well, you obviously don't think so, John. I think folks are afraid they're missing the boat. Are they though? Is there really a boat to miss? Do you think so? I don't mind making money off of corrupt business, but draw the line at CS corruption or anything more corrupt than them. Wow, people really don't like this. I'm seeing a lot of trash talk in here. Europe is in big trouble. There will be a lot of HFs. What is does that mean hedge funds? I assume that means hedge funds. I mean, that kind of makes sense. I would be surprised if, I mean, yeah. All of those things, investment banks, hedge funds, they're all kind of intertwined. CS out to pasture. Will the Swiss government take over? The Arabs are done giving this company money, and now they come to the U.S. and CDN. I don't know what CDN is. Is that a company? CDN. No. I don't know what that is. CPI tomorrow. Credit Suisse bonds are trading around 7% for 2 to 4 year duration. Downgraded from A1 to A2 and maintained the negative outlook. Why do you think the Pope said bring the monies back home? The Pope? You mean you mean like the Pope? The bots on Yahoo Finance are terrible. I mean, I agree with this sentiment. In fact, it's gotten very bad recently, in my opinion. But why are you talking about this here? Are you implying that Jimmy here is a bot? Because the bots on Yahoo Finance usually, like, these guys are bots. These guys who just post links, or sometimes you'll see, like, some guy who mentions some investment advisor, and maybe like 20 replies to him saying, "Oh no, yeah, this guy helped me big time. Thank you." But it's all bots. You know, it's all advertising garbage. This guy just said something the Pope said. Or else this guy's not talking about the Pope, maybe some guy named Pope. I don't know. I think I've spent too much time analyzing this comment chain here. How do you bail out a bank which has $1.25 trillion in normal debt, probably another $1 trillion in unmitigated derivative exposure? 100 times worse than what Lehman Brothers went through over a decade ago. The problem here is, actually, this is pretty interesting. I want to read the rest of this. Problem is that if you attempt to bail them out with public government funds and taxpayer monies, you're so screwed in so many ways, and if you don't, you're still very screwed in massive ways. Even the combined resources of the governments of Switzerland, Germany, France, Italy, and Austria, of which those who will be immediately and hugely inversely affected in multiple ways, so the bank collapse won't come close being sufficient. And of course, then we have Deutsche Bank, who's probably in worse shape and more exposed. You are keeping it in Europe, yes. You are keeping it in Europe, yes. Does that mean that its American equivalent, American Credit Suisse Bank, is not in necessarily that bad of a state? They really have that much debt? That's kind of ridiculous. Can I look at, I want to look at, would that be in statistics? Holy shit! What the fuck? $218 billion in debt. They have a lot of cash on hand, sure, but here's something I don't understand. They have a lot of cash, okay? They have enough cash to pay off that entire debt, so why don't they? or else this isn't actually cash, and maybe not all of it is liquid, or maybe they don't feel comfortable enough paying that all off, and what do they have left? 20 billion? That does seem very low for an major international investment bank. Very interesting, very interesting. Not only the fact they have so much debt, but the fact that they apparently have the cash on hand to pay it, but for some reason, they're not. Very, very interesting. Okay, we're almost at the 5-minute. There we go. I want to look at their earnings. I want to look at Credit Suisse Q2. Oh, do I have to accept your cookies? No, let's reject that shit. Oh, this is just... No, I don't want that. I want this. Do I gotta make an account to read the New York Times? Is it gonna tell me to make an account? Oh, no, apparently not. I could just read it. Weak performance stood in contrast to more upbeat reports from Deutsche Bank and UBS. But on Wednesday, the result was weighed down by its investment banking business. Swiss Bank also announced a change to its leadership and a shift to scale back the tarnished investment bank. Bank lost 1.59 billion Swiss francs, or about 1.65 billion in freedom dollars, in the quarter, compared with a profit francs a year earlier, which still isn't a whole lot. I mean, sure, profit's profit, but compared to this, holy shit. The last 3 months has ended in June, stood in contrast with more upbeat reports. Stemmed from the investment bank, which posted a net loss of $1.2 billion. So it would make sense that in market conditions like this, an investment bank would post a net loss. So what I'm thinking here maybe is that their current not great market performance is directly tied to the not great market performance of, well, the market. So it's very possible that once the market stages a turnaround, this company will, in essence, also have a turnaround. And I kind of wonder if... So, when the market turns around, you'll probably see this stock price turn around just, based on the fact that it will follow the rest of the market. But I kind of wonder if it will have a little bit of a kind of like a double recovery. Because you will have two major driving factors that can make it go back up. One, you have market recovery, rising tide raises all boats, that kind of shit. And also, that rising tide doesn't just raise the stock price, it also raises its earnings back into the positive. So you can almost have like a two-factor recovery once the market turns around with this company. If in fact that's why they had a net loss for the quarter two. Based on what I'm reading here, that seems to be why. I think, driven by slower issuance of bonds and loans for companies and a decline in trading revenue. I would assume it's this one mostly. It could be this one too, but that might also be due to market slowdown. Quarter profit of 1.2 year, which was well above analyst expectations. Now, the part of this that I don't understand is why is Deutsche Bank doing so well? Maybe they have shuffled around their assets in a much more efficient, much smarter way than Credit Suisse has. Because so in this market right now, in my personal investing, my personal portfolio, I'm not doing too well. Because I decided to hold everything, I didn't sell anything. So I'm down pretty majorly, but it's not a loss until you sell. On paper it looks bad, sure. But I'm a fairly young fella. I don't mind waiting out tumultuous periods like this. So it's potential that Credit Suisse had that kind of... Because, I can't... I have a day job. I can't sit here every day and monitor the portfolio and do little trades here and there. I don't have time for that. It's possible that Credit Suisse took that approach where they're like, oh, we'll just wait out this period. It'll recover. And yeah, sure, they're right. But it's potential that Deutsche Bank did a more proactive approach. Like, we're not going to wait this out. We're going to start shifting around investments. We're going to move. We're going to maybe even start shorting things so that our profits look better, which they easily could have done. It would make Credit Suisse look better if they had done that. But just based on the fact that they didn't do that, and perhaps they just decided to hold things. Again, this is a very simplistic analysis here, but I think you kind of get the gist of what I'm getting at. Would they have been in a better place? Sure, but is the place that they're in right now, if the assumptions and thoughts that I'm making here are correct? No, I don't think so, because the market will recover. Okay, so what do I want to do with this? I actually don't think... So, if what I was thinking was correct, I honestly don't think this company is in that bad of a place that it looks like. If its downturn is most definitely market-related, as I said, the market will recover. Now, how strong, or how fast, or even how soon, you can debate that back and forth, but it will recover. It always does. It's a joke for a reason that markets, stonks go up. Because going up is the natural state of the market. Growth is the natural state of an economy. It will have some tough times. It'll hit some speed bumps here and there. We're hitting a speed bump right now. But growth is the natural state of things. And once we're past this speed bump, it will return to be the natural state of things, and you will see potentially a very strong recovery in this company. Again, assuming everything that I read and understood and interpreted is correct. It's possible. It's possible it's not. But if it is, when that happens, you could probably see, I think, a strong recovery in this. And again, possibly a twofold recovery. One, from the idea that rising tide raises all boats, and also from the fact that rising tide doesn't just raise their boat, it also raises the earnings that then go on to raise the boat even further. And for these reasons, I actually think I'm going to go against the popular sentiment here, and I'm going to say buy for this. Well, should I say buy, or should I say hold? Am I being too... No, you know what? I'm going to forego the hold. I'm kind of tempted to hit that hold, because it's possible I could be wrong about these things, but I think I'm comfortable enough to say buy. I'm comfortable enough to say buy, and also, so I said that I'm saying buy in contrast to what seems to be the popular sentiment, not only in a lot of the articles that I read, but also in the Yahoo Finance comments section. That debt was a little weird, but the fact that they have enough cash, if it gets really bad, the fact they have enough cash on hand to pay that off anytime they want, even though they're not for some reason, kind of minimizes the impact, minimizes the concern of that. But yeah, I'm going with buy despite a lot of the negative things I saw. And I feel like the sentiment rating that the internet at large has here is very interesting. It's in the negative, sure. Again, this is on a scale from -100 to +100, with 0 being perfectly neutral. I think this rating is interesting because it's negative, but it's not. It's -11, but it's not super negative, which means that sure, most people think that it's not really going places, but most, when you say most, you mean majority. And majority can be borderline. It could be 51%, 52%, 53%. I think sure, you can say that the majority of people think that have negative feelings about this, but I think more people have positive feelings than you would think. And I think that's reflected here, and I'm one of those. And I think that's reflected here based on the fact that this isn't really all that positive, or sorry, all that negative. At least not nearly as negative as you would expect it to be, based on the sentiments that I read, and all the bad earnings reports that I looked at, and all the articles about all this shit happening. So I think this rating actually makes sense to me. I mean, I don't agree with it. Personally, I would put the sentiment in the positive, but I think the fact that it's sitting here at just slightly negative makes sense to me as the collective consciousness of what everyone's thinking about this company. So that's interesting. So yeah, I think it's a buy, and I am very interested to see in the future if I turn out to be correct on this. Feel free to let me know what you think, and I'll see you in the next one.